Hey everyone, what's going on? It's Jason here. Today we're going to recap of AMC. Also, big news just hit that AMC has pulled the plug on the 500 million stock share vote. If you haven't hit the like button below, make sure you guys smack that like button. Not only help out the video, but it also helps out new people learn about AMC. And if you're not a sub, think about hitting the sub button. We do daily videos and daily streams on AMC and other stocks. Love to have you guys be a part of the family here. Make sure to hit that sub button, hit that notification bell. Also, if you wonder what I'm using Webull. There's a link down in the description. Go down and click on that link, sign up, put $100 in. You get 2 free stocks worth up to $1,800. You also get the tier 2 NASDAQ leads for 3 months. Hey, that's free money. Why not try it out? As you can see this morning in the pre-market hours, we started out right at about $11.86. Then we went down a little bit going into the market hours. We did start market hours right around 11.75. Shot all the way up to 12.22. Came back down to get off that to 11.32. It was a wild ride this morning. Shot back up right after that to $12.06. We kind of bounced around though throughout the day right here between like 12.10 down to around 11.75. Back and forth, back and forth, back and forth. We did end the day though on the downside a little bit though at 11.46. Now again, that's pretty much a flat day really from where we ended yesterday. We were down, 0.35%, so not much at all. And in aftermarket hours, we have right here pretty much finished. We have 4 more minutes left at $11.28, or another negative 1.57%. Now, we'll go over why we had a little bit of negative today. We had some news come out today as well about some shares being added as a direct offering today. Being rumor around that could have made some people sell off as well. Also, on top of that, you're going to have some hedge funds, taking advantage where they can. As always, hey, there wouldn't be hedges if it wasn't that way. But as you can see, we had a really, really big day yesterday. And for the most part today, we did end around where we ended at yesterday, just a couple cents below that. So overall, it's not a bad thing. Having a little bit of pullback here and there, it's not the worst. Again, we're at 11.46 right now. Well, I guess currently in aftermarket is 11.26. I'd expect to see this go up tomorrow, though. And hopefully that does happen. Now, back over here to the options really quick. At $11 right now, we do have 20,592. That would be in the green. At 10.50, we do have 14,084. That would be in the green. At 10, we have 13,173 in the green. At $9, we have 11,233. Now, if we can't get up to 12, we'd have another 18,283. And at 11.50, we'd be at 9,888. Now, I do honestly think we can get to $12 by the end of the weekend. We're pretty much already there. Again, we did have a little bit of news today that could shake the markets a little bit tomorrow. So we'll have to see what happens. Hopefully, we won't have so many people freaking out about a little bit of share offering into the market, but we'll go over that in a little bit. So shaking up over here on the Ortex numbers, we did have a little bit of changes here and there that are good changes, right? The exchange reported short interest is currently at 93.89 million. Previous 7 days was 73.82 million, with a change of 27.81%. Estimated short interest percent of free float is at 23.89, previously at 23.03, with a change of 3.73%. Percent free float on loan is currently at 36.89. 7 days ago, it was at 36.06, with a change of 2.3%. All good numbers going up here. Shares on loan is currently 154.05 mil, and 7 days ago was at 150.59 mil, with a change of 2.3%. Again, another, good upgrade right there as well, going in the right direction. Days to cover loan is right at 1 right now, again, at 0.99. And the previous 7 days was at 0.88, with a change of 12.82%. Now, cost to borrow is at 12.16. And 7 days ago was at 7.23, with a percent change of 68.18%. And utilization is still at 100. Again, we're still at 100. This is great. Been steady at 100, but we have been at 100% for a while now. And again, 7 days ago, we was at 99.93. And that kind of shows you how close you were just 7 days ago, how close you were at 100 right there. And I think we've been at 100 right now for about 5 days, 5 trading days anyway, which is really, really great. And again, that's a percent of 0.07%. Now, we did have 2 big orders come through earlier today. One of them was for the amount of $1.418 million. And another big print order, even bigger than that and way bigger than that, was for $7,637,000. So these are all really, really, really big numbers coming in right here. We had these 2 right here today, which is great news. Again, having bigger investors come in and invest in AMC. Again, knowing that even with the target price of some of these other guys like B. Riley giving it at $13, lets them have more confidence coming in and buying in at 10, 11, 12 bucks. And again, helps us overall with the squeeze. Now, checking over here, obviously on the trading view side over here, you can see right here today was a weird up and down day. If we were to bring this back out to yesterday, obviously yesterday you had a lot more buy zone going up. But again, today we did have a little bit turn back. But overall, we did end pretty much even where we ended at yesterday. So you kind of just, scrap a little bit earlier today. Scrap the aftermarket hours yesterday. It isn't that big of a deal. Currently, we are at a really, really good price with AMC. Now, getting over to our bigger news story right here again. AMC theater chain Yanks plan to issue 500 million new shares. Now, this obviously this is a little bit of misjournalism here. They were voting on having 500 million shares to use in the future, not right now. Again, it's pretty much clickbait, right? Pretty much clickbait. But hey, either way, it explains it right here. So AMC Holdings scrapped a contentious proposal to issue 500 million new shares, saying a separate plan to sell a far smaller sale would be sufficient to meet the movie theater chain's cash needs this year. And we went over this a while ago that they did have 43 million shares they were going to use soon, probably. Obviously, this company is $5 billion in debt. So obviously, selling some shares into the market is kind of needed, right, to keep this chain afloat and keep this movie theater hungry. But again, these kind of shares like this, where you're selling smaller amounts to 43 million, that's going to get bigger investors coming in, and honestly would probably drive the price over where it is right now. Because hey, bigger investors like your suits, your commercial investors aren't going to invest in a company that's heavily in debt. Well, guess what? They are going to invest in companies that are paying off lots of debt, and 43 million new shares will pay off lots of debt and give confidence for bigger orders to come in. And I expect to see these bigger orders coming in and in every day, more and more and more and more, as they get this debt paid off. Again, this article is kind of misladen with some little bit of lies here and there, right? They weren't going to issue 500 million new shares. They just want to have those shares in case they needed to use them, like they have done in the past, back in like 2012 or 2014, somewhere around in there. They did the exact same thing, and they used those over this time, and they still have 43 million shares from back then that they haven't used yet, and they're probably going to use those soon. Again, they just registered these. So the board will no longer seek investor approval to boost its authorized shares by 500 million, the company said in a statement. It's also registered with the U.S. Securities and Exchange Commission Tuesday to sell 43 million shares through a so-called at-the-market equity offering. Now, this is similar to what GME did as well, aka GameStop. The cinema chain managed to skirt bankruptcy during the pandemic and had hoped its issuing new stocks could solidify its comeback. But Chief Executive Officer Adam Aron already had to assure investors that the larger sell wouldn't affect this year. He said earlier this month that short sellers had seized on the company as it tries to bounce back from the pandemic lockdowns. And this is true. Obviously, we all know that this stock is shorted. These people, aka some of these hedge funds, man, are notorious for driving down the price of stocks. That way they can make some money in return, hurting companies and putting some companies out of business. It's the reason why I joined this in the first place, to hopefully teach these hedges a little bit and maybe cost a little bit of that green. And we kind of already did that. Melvin Capital, Citadel. Sorry guys, I had a cough there. AMC shares have gotten a boost from the Reddit-fueled investors this year, sending the stock up 441% this year. But issuing 500 million shares would more than double the stock's outstanding, diluting more current investors' interest. But again, they weren't going to deliver 500 million shares all at once. And again, it wouldn't have been this year. Next year, they probably did like maybe 50 million or something like that, maybe 100 million max is what I would guess. But they don't have to do that anyway. Again, they do have the 43 million, which is what we're going to see. Many of our stockholders are telling us to wait, Aaron said on Tuesday. Again, I like Adam Aron. He's a very, very good CEO. He does listen. It is important to listen to these owners of our company, and that's exactly what we're going to do. Now, I think eventually they'll have another vote, maybe not for 500 million, maybe this time it'll be for like 200 million again or 300 million, kind of like it was back in the past. And they'll use those, pretty much throughout the whole decade if there's some big thing arises, they need to pay off debt or anything like that, right? Those shares right there helped out AMC stay alive. Without them issuing shares last year, the company would have got hurt, right? They could have filed for bankruptcy or had to or something like that, right? Every little piece of money they can get through these shares over time is good. But again, if you were to put out these shares all at once, then that can definitely hurt investors big time. And you're not using these shares as a strategy to help out the company overall. And again, that right there boosts the price like it has the last 2 times AMC has done a stock offering. The prices went up, not down. And again, it will happen this time too, because AMC is offering these shares at stock value. Again, what that means is they're not offering this thing at $8 or $9 or $10. They're offering at the value where the stock is right now. That will not hurt the stock price. AMC has already raised more than $1 billion in financing, helping keep it afloat while the theater was closed because of the pandemic. Some creditors have promoted the idea of selling more shares to pay down debt. And again, I think this is a good idea. You just can't do it all at once because that can hurt the stock. And I think they're doing that by this $43 million, and we'll go over that in a minute. The chain's bonds have rallied as more of its locations have allowed to reopen, but much of the debt still trades at distressed levels. And I agree, obviously. If we didn't have this $5 billion in debt, we'd be up there with Cinemark and others in the $20+ range right now. And I think as they start paying this off, we're going to see this stock price rise, which I have already indicated. Now, obviously, AMC's, and this is the other article we were going to go over real quick. This is the AMC Entertainment anticipates its Q1 sales of $148 million versus $941 million from a year ago. And again, obviously, things were shut down. So let's be honest, it's obviously going to be down. But the $148 million with the things being shut down is really, really good, honestly. Also, we just went over this with the scrap stockholders vote on the share sale, but it does go over the $43 million that they're issuing, which we've already talked about before in other videos where I got yelled at by people in the comments section saying, he didn't say that. Why would you do that? Why would you say that? Because it's going to happen. There's no reason why you wouldn't do that. Again, debt goes down, price goes up. I don't know why anybody would fuss with that. AMC Entertainment offered a preview of its quarterly earnings Tuesday, anticipating revenue of the 3 months ahead in March of $148 million, way down from the $941.5 million from a year ago as box office trouble, obviously, to revive amid the pandemic. But again, I feel like people are dogging down too much. Again, yeah, $941 million would have been great, but again, theaters opened up to 25%. Lots of theaters weren't even open yet. So we'll see this kind of pick up next quarter as well. The $148 million is actually really good numbers. AMC expects to announce a net loss of between $572 million and $567 million. It's earnings season now, but the theater chain hasn't yet set a date for its quarterly financials. We'll probably see that somewhere in May or June. It revealed the numbers in a SEC filing where it also announced a plan to sell up to 43 million shares in a so-called at-the-market offering. That would be, instead of previous plans authorized to sell up to 500 million new shares. But again, I think these people really don't get what they were doing. But yeah, we've went over this many times. They weren't going to offer 500 million new shares. They were just going to have that in their back pocket in case they ever had to use some of them at willing times, right? It withdrew that proposal, which would have resulted in a major stock overhang. Adam's CEO noted that the company has previously pointed out that the sale of up to 43 million AMC shares currently available amount for possibly insurance under a previous shareholder authorization should more than satisfy AMC's liquidity needs for 2021. And I agree with that. This assumes an expected recovery in the patrons of movie theaters in the second half of this year. In asking the AMC shareholders to vote among approving another 500 million authorized shares, we noted that our goal was to increase longer-term optionability and flexibility for AMC, but that we had no intentions of actually issuing any other 500 million shares in the immediate term. AMC estimated its cash and cash equivalents at March 31 were 813 million, and in addition, as about 212 million was available for drawing under its revolving credit facility. Now, what's this mean real quick? That means that they're probably going to issue up to 43 million shares, somewhere around there. I'm sure they're probably going to issue them. I don't know when they're going to issue them or anything like that. They just now registered these. Maybe some of this sell-off today was from some of that, right? I kind of doubt that, but it could have been. We could see some paper hands freaking out. They don't really know how this would work. They also don't know that these shares are being dropped at market value, so they're not being dropped at say $9 or $10, which would bring the price down because people don't really be buying over that right now as they're doing a share offering. That's what happens sometimes. But hey, What can you do there? You know what I mean? People just don't understand that, and that might upset some people. Hopefully, this video obviously shows them that this isn't a bad thing. Them paying down some of their debts is a good thing. Again, this allows bigger commercial investors, suits and stuff like that, that do like AMC and like theaters, to buy in without the course of this, overhanging debt over their head. And I think this right here is a good strategic plan, and I think the price should go up off of that, off of them paying off some of their debts. And that's what I hope to see. Kind of like when people say, well, why is Cinemark trading up high? Why is IMAX trading up high and all these other theater companies trading up in the $20 plus area? That's because they just don't have as much debt right now, right? Again, AMC is a big theater chain. It costs a lot more for them to run. So obviously, if you're shut down in a pandemic, it's going to rack up a lot of debt. And hopefully this right here takes care of some of that debt, and we'll see AMC price rocket up, which again will help us all and really, really screw some of these people that are shorting AMC because they think the company's going to go down because of all the debt. And this right here can show them, hey, look, this company's not going down for debt. We're paying off some of their debt, and I think we're good to go. I hope you guys enjoyed this video, though. If you did, make sure you guys smack the like button. Also, make sure you guys hit the sub button, hit that little bell notification. That way you guys can stay up to date. And also, if you guys haven't joined our Discord channel, make sure you hit the Discord link down below in the description. I will see you guys in the next video. Peace, fam.